This podcast is sponsored by Tusk, an open source non-ICO crypto project powered by community. Check them out on the web at tusk.network. That's TUSC.network. The Rob McNealy program is the nexus of cryptocurrency, blockchain technology, and entrepreneurship. Now, welcome to the program. Hey folks, Rob McNealy here, and today I'm pretty excited. We are talking to Lennix Lai. He's Director of Financial Markets of the OKEx Exchange, and they're one of the biggest exchanges in the world. And I'm really excited to see what they're up to. So Lennix, how are you today?
Hi, Rob. Yeah, sure. I'm really appreciate that we're on the call. We're happy to see you folks here.
Well, so let's just jump right in here. Tell me a little bit about OKEx. How did you get involved with the crypto exchange world?
Yeah, I'm a background, a traditional finance background. So basically, I was a quant trader in Hong Kong for around 10 years. So I'm also kind of like compliance and regulatory guys in Hong Kong. So like 3.5 years ago, that's where I joined OKEx because the OK group back in the time would like to expand the exchange business internationally. Back in the time, we're actually very big in China already. We're offering Bitcoin exchange service for local currency. That's becoming one of the biggest crypto exchange in China already. And we would like to expand to the international market. So that's the reason I joined and starting to build and brand it as the name of OKEx. The OKEx name actually very benchmarking Hong Kong exchange is also called HKEX. So we would like to brand in our exchange expertise and also the traditional financial knowledge. So to brand in the world, to bring crypto to traditional finance. So that's how it gets started for OKEx like 3.5 years ago.
So what would you say some of the biggest challenges are of running an international exchange right now?
So we are actually one of the earliest player in the field. So back in the time, we got a lot of good player like Pinonix, Bitfinex, Coinbase already in place, Kraken. That's all the big. We're actually very very small compared with the biggest player back in the field. So we think we are facing several challenges. First, we are primarily and very very Chinese-based exchange. So everything in terms of the team, in terms of the product, in terms of the guts are all very, very Chinese. So we have to change the entire organization style, all the language, all the culture within the organization. So if you think about it, anyone who ever run a company would think that would actually agree that changing the culture or changing how an organization work complete upside down is actually very very difficult. So bringing the international value and international culture back to a very Chinese exchange is the most complex and complicated task that we ever engage. And also we do have a lot of problem on our products. So we have to assemble a team with deep financial knowledge, so to completely redesign for every single aspect of our OKEx from across all our products, spot derivatives or everything else from the guts. So I think that might be several big challenges we come across, but at the same time we are facing regulatory challenge all around the world. So that we have to assemble a really big compliance teams to tackle regulation everywhere and to apply proper license to get in the proper sandbox in crypto. So while we're talking to regulators, we explain our business, we have to convince that we're trying to be a good guy. So we have to, I think in general, we are actually building a rocket, but at the same time, we are driving a Ferrari. That's all. That's the summary.
Well, I like Ferraris, so that's good. But so what would you say the biggest challenges from a regulatory standpoint, at least geographically? Which countries are the hardest ones to work in?
Yeah, I think back in the time like 2017, 2018, or I think all the government and kind of like being skeptic, or some of them are actually quite hostile to crypto or to virtual currency. They have no knowledge at all to what's going on in Bitcoin area. They are actually interested, but they think that virtual currency or crypto actually engage a lot in illicit activities, anti-money laundering. There's some of the area that regulators are mostly very, very concerned. And at the same time, they're trying to fit in. They're trying to bring crypto, trying to explain crypto in a way that the current regulation that they're already implementing, they're trying to fit in crypto onto their current regulation, which is really difficult. So back in 2017, 2018, most of our job is to explain to our regulators, to all those regulated, hey, this is crypto, this is just some kind of digital assets, and this is some kind of a digital asset that we would only allow KYC people to buy or sell, and exactly like meeting your financial standard and your AML standard. So to explain all those stuff to all kind of regulators. So we're starting to see some progress. We see the US come up with a digital asset framework. We see some of the government like Malta government to have a virtual currency framework. We see Korea and Japanese government, they do endorse and have some kind of regulation related to cryptocurrency after the industrial commitment for around 2 years or more.
So would you say, is there a particular jurisdiction that's been harder to work with?
I think there's no jurisdiction that is hard to work with as long as they are open to talk about. They're not being hostile, completely shut the door. Most of the jurisdiction, I would say, they would very eager to learn, very eager to learn from the biggest player in the field. They would like to understand. Of course, they will raise a lot of questions, but some of the jurisdictions are particularly friendly, like the Singaporean governments and the Korean government, and even the Maltese government, actually quite proactive to want to draft local regulation or specific regulation just for crypto. The other jurisdiction, I think, they are very interested. They would like to bring in the crypto asset into the security law or the derivative law. They are interested, but at the same time, they were actually very difficult for them to actually blend in the current regulations.
How do you see things like the travel rule affecting your operations?
I think the travel rule needs actually spend a lot of effort for us to completely redesign how the AML and KYC would be implemented into the current operation. So before that, it's actually we don't need to we only need to worry about the global standards of KYC and AML. But the travel rules actually means that we have to specifically design our checking procedures for all the European biggest customers across the field. I don't think that is big trouble or big problem to our operation, but it's just one of the costs of the business. If you want to play the field with the big boy, we want to be a global platform, that's just part of the cost of the operation. We're happy to pay for that.
So do you have much of a footprint, you would say, in the United States at this point?
We don't have, we don't allow US customers at the moment, at this point in time.
Is that something you're going to do in the future, you think? You don't have to, like, if it's the proprietary, you don't have to answer, but I was just curious, is that on your roadmap?
Actually, we do have a partner exchange that's actually belongs to a similar group. It's called OKEx. So already get basically all the license in US. So already open to the US customers. Uh, so it's really completely different platform. It's basically a partner with OKEx, but only the product that available on OKCon platform is very, very different than OKEx. But the technology and the matching engine itself using similar technology with OKEx.
Actually, I got one of their marketing guys is coming on my show on Wednesday this week.
Yeah, that's awesome. Sure.
So yeah, it's going to be fun. And so I think, that's always fascinating to me is, how, the regulatory piece of this looks from the inside. Like I always say when I'm kind of in a mixed or kind of in a weird position because I also have a project, but I'm also, in doing a podcast and things. So it's like, but I see crypto from a very different angle because on the project side, you see the world very differently in crypto when you're working inside of it. And you see all the warts and the good and the bad all the way around. But I always like to hear, what does it look like on the exchange side? Because, there's a lot of, unscrupulous exchanges out there. And I can tell you, having dealt with several of them in the past myself. And so that's why I'm always interested in, the more legit exchanges like OKEx in what they're doing and how they're handling it. So let's shift gears a little bit. There's a lot of exchanges out there that seem to be dodging regulation as part of their business model. I'm not going to name names, but there's some exchanges that you don't even know where they're domiciled. And
Correct.
so since you don't know where they're domiciled, and it's even interesting, even with smaller exchanges, you go try to look up information on the exchange, and on CoinMarketCap, it says they're based here. And then you go to their website and it says they're based there. And you never know where they're really located. And so that's always kind of a red flag for me. Is especially at the centralized exchange, because you don't know where they are. And so they're supposed to be a centralized exchange.
Correct.
There's no central location to go. And I'm not saying you should go after people, but you don't know who these people are in some cases or where they are.
Right.
And it seems like some of these exchanges are doing it deliberately to avoid complying with international regulations. Again, not going to name names, but how do you guys compete with that?
We don't need to compete with some of the exchange or smaller size exchange that's trying to dodge regulations. OKEx is 1,000 people group already, so we cannot dodge any regulation. We actually equally comply to the jurisdiction that we allow to service, that we offer our service. We cannot. We have 1,000 people to be responsible. But for all the other smaller size exchange, they have the reason. Maybe they have the reason to try to evade regulation as much as they can, because some of the really small size exchange is kind of like using hit and run approach. They just want to put a small exchange trying to grab the users. They some can't. If there's some trouble, they just close it down and reopen in another one using similar technologies. And so of course I would like to remind all the users to beware of the really, really small size exchange, and you basically apparently you cannot find where they are. They do not have a registered office. They do not have a proper team, and you don't know where they base. They don't show up all the time. So, and some of the exchange, they do not have a long history, really short history. You have to be beware of that, because talking about central exchange, meaning that all the crypto stack that are in custody with the hand of the founding team or the wallet team. So actually you carry a lot of counterparty risk if you would like to trade with them. So some of the small size exchange also do not have a high priority or high scrutiny of the project that allowed it to list on the exchange. Most of the exchange, most of the project is required to pay a huge sums of listing fee in order to get listed to a bunch of small exchanges that to grab as much as users, traders as they can, and try to run away in a relatively short period of time. The opening an exchange in terms of module costs is relatively easy, but running an exchange operation with proper cybersecurity, with proper compliance team, with proper operation team, is take years of efforts. So I would also always to emphasize to us is that only focus on the major exchange in the world, because they're already there, they have the history, and protecting your crypto assets from millions hackers in the world is not an easy task. It's a day by day commitment. So we care a lot about our reputation. We care a lot about regulation. We have to comply everywhere in terms of regulation. So I don't think it's a direct competition with us compared with the other smaller size exchanges.
So right now, the best I can see, there's at least probably, I don't know, 500 exchanges out there right now floating around. And there seems to be more popping up, every single day. And there also seems to be a lot more DEXs kind of in various, stages of development. Oh, how do you see the market for exchanges in the future? Do you think centralized exchanges are going to be, the most popular? Do you think DEXs are going to become more popular? Do you think there'll be more exchanges out there, fewer exchanges? What do you think the future is going to hold that way?
Yeah, I think that the potential of DEX is actually very, very interesting. So DEX can be the only problem for DEX maybe before or for these few years that people have been talking about is mostly related to the capacity, the technological capacity of of whatever blockchain that you're implementing. So, but we see so over these years that we see a lot of breakthrough in the underlying technologies that have a huge promise on the TPS, the transactional per seconds, right now per blocks. So it looks like that DEX, if they can manage to handle even a certain portion of the trading volume that's currently a central exchange is currently trading per day, I think that would give us an interesting use case, a potential to crypto, so that everyone would able to trade universally, and also everyone could list their own token universally, and that technology is free, it's open source, so everyone would have the capability to operate, to open a DEX, and eventually everyone can compete with each other with their own unique advantage or unique appetite to different tokens. So DEX can be a very interesting. I think if the technical side transform, the technical side becoming really, really promising, like the TPS reach a certain threshold and is safe enough to be trustable for traders, and the UI and UX, the user experience side of using that has been substantially improved. The DEX in terms of trading volume and the size could be growth exponentially. But while the central exchange, I think that still play a very important, a crucial role in crypto aspect, because it's carry a lot of aspect in DeFi. So for example, like central exchange is still happening to having a lot of products, really complex product that's basically right now cannot able to undertake by the DEX for now. For example, like derivatives, a perpetual swap, we're talking about millions of orders of thousand trade per day, but it cannot be executed without a proper high frequency matching engine at this point of moment.
So essentially, as the technology improves and maybe you start getting these non-custodial cross, chain dexes, those will probably increase over time, but it's just not quite there yet, I guess.
Yeah, I think it's getting a lot faster right now. But per my understanding, we're talking about some of the chains talking about 1,000 TPS compared with 20 or 30 TPS in 1 or 2 years ago. So if it's go around 2 or 3 times more, I think we can handle probably on spot exchange already, and some of the really and I'm talking about some of the DEX that's able to manage derivatives. If they are able to manage the liquidation engine of the derivatives under this certain time of DEX, under that's around 1,000 TPS, that would be so interesting because when you're talking about highly leveraged exchange, when the market is moved, you have to execute and you have to send your orders in the blink of a second. Otherwise you will trigger custody liquidation, or you create problem or trouble onto your platform. So that I would be very interesting to see that how DEX will handle highly leveraged instruments.
It'll be interesting. What's your take on the latest sushi sandwiches and hamburger DeFi products that are out there?
Yep. I think that everything is looking to be right now is having insanely high yield for some of the token. I think in general, I think is another way for distributing token or distributing newly minted token to users. It's look exactly like the another way of the ICO or the fork token in 2017, or the IEO that the exchange initial offering is a new I think in 2017 we call it airdrops. So whoever carry a one token, you got a candy, we call it airdrop tokens, free token from the other token. So similar mechanism. The ultimate purpose is also a sales of my own newly mint token. But what DeFi or sushi or hamburger, whatever, sashimi is actually having a mechanism in place, meaning that you have to stick one token first for another token in order to farm another token. So that actually the staking component normally is over collateralized, meaning that you have to deposit more token first in order to means or farm a relatively smaller size of token. So the risk compared with the other mechanism, the other distribution mechanism, I think that would be a bit more healthier to token holder, and I think that DeFi innovation would last for really a long time. I think I agree. The inflation rate, the yield right now is insane. It's not sustainable. But the way that how we understand DeFi, the way that people are interested to participate in DeFi, the projects that's allowed it or that would be pivoted to participate in DeFi would be becoming a really hot trend for upcoming years.
I think the future is going to be very interesting in this space. I haven't been shy. I've been saying that this, in many respects, is ICO 2.0, and I just hope that the fallout that comes out of this is good innovation, but it's going to crash back down, right? I think you said it too. It's not sustainable, what we're seeing out there. But what I'm hoping is that there's new innovation in the technology, and I'm hoping that's what comes out of this, but I'm afraid we're probably going to get a lot more regulatory scrutiny from this as well. So it'll be interesting to see how it plays out.
Yeah, you cannot deny that every new technology or new money or new way of thinking has to be created from chaos. So these kind of defined chaos might not be sustainable. There will be market correction. There will painful correction too. There might be arousing regulatory scrutiny, as you mentioned. But eventually, this kind of token distribution method would be an interesting insight for the upcoming DeFi development. So people will actually think about, hey, that's going to work. But if we want to do it sustainably, I think we have to change it to a certain manner. And that would become a healthy growth for the industry.
Totally agree with that. So where do you see crypto changing in the next couple of years? What do you think will be the next big innovations coming out in, say, the next 3 to 5 years?
Wow, that's I would personally I would very exciting that similar model as in Filecoin, that people can actually share data on chain and trade the data on chain with the development of Filecoin. So Filecoin it just might be a spark of the entire fire. So the similar project like Filecoin, even what you're talking about, data privacy, your personal data that can be exchangeable, or your Filecoin might be start with storage. You can just trade or buy or sell your own personal storage within every kind of a computer that can be trade or transact via on chain. But this economic and trading mechanism would be an interesting insight or interesting hints for the other data-driven industry. So people can sell everything if they carry a data. So Filecoin might be the success of the Filecoin, hopefully, would become a very interesting development for crypto for the next 3.5, 3 and 5 years. Because right now, if I can sell my idle storage, idle virtual drive online, like a cloud-based server, but so that I can basically sell everything. I can using the exact similar mechanism or similar blockchain or similar tokenomics to sell everything that have data currently available. That might be the beauty, the very first true adoption for blockchain technologies.
I think that's very interesting, and I think there's going to be a lot of interesting use cases. For instance, I really like library, library credits. I like what BAT is doing with Brave browser, where you actually are developing ecosystems that are using the crypto. And I think that's important. And even with our TUS project, that's what our focus is getting people to use the coin, not just speculative hype. And I think that will be the future. And I think I think some of the projects that are most likely to be mass adopted in the future are going to be ones that you don't even think about right now. They're going to be ones that just slowly start building up an ecosystem where people are using their coin for a practical purpose. And to me, I think that's real important. So I guess one last question before we kind of wind down. Do you think there's too many assets? Or do you think that there'll be more assets in the future, like more blockchains, more coins, more tokens? Or do you see that over time that's going to consolidate down?
I would say both, to be frank. So I think the barrier of cost of issuing or minting or creating tokens for hype, for speculations, will still be there. It's just part of the crypto ecosystem. But but when you get speculate more, people will lose money, and people getting smarter and smarter. When they get smarter, and when they get a bit more cautious, a bit more conservative, they would be tend to be looking for the true nature, the true adoption of certain tokens. So the money will be really concentrated back in the 1% or top 1% of the token that actually bring the real value of the world. They were starting to look at the fundamental. So I think I would say new token was still there. There were a lot more, getting a lot more sizes, but growing from years, right? Talking about 1-2 years or more, I think the capital or the capital that allocated to crypto assets will be mostly or heavily concentrated to real projects eventually.
Yeah, I think so as well. I think what I've said this in my circle of friends is that the first cryptos to start getting a real adoption, even niche adoption, not even mass adoption, but just niche adoption, are gonna eventually change the way the speculative part of the market values those projects.
Correct.
Because I
Correct.
mean, right, how I see it is you have billion-dollar market cap projects that don't have any customers.
Correct. You're right. You're absolutely right. I think people right now is like looking for answer, right? If you can able to spark the fire and you provide true answer, you got everything. You got everything in the space. People for speculative money will just crunch in and invest to your own projects.
Exactly. Lennix Lai, where can people get a hold of you?
Sorry?
How can people find out, how can people reach you?
So I think you can basically reach out on Twitters, and my email is lennix@OKEx.com. You can find me on Twitters, Lennix@OKEx as well. So you can reach out anytime. I'm happy to answer all the questions.
Lennix, thank you so much for coming on the show today. I really appreciate your time, and I've learned a lot.
Thank you, Rob. It's a pleasure to talk to you again. Thank you. Thanks so much.
You have a
Bye
great day.
for now.
Thank you for listening to the Rob McNealy program. Make sure you check us out on the web at robmcnealy.com and subscribe to our podcast at YouTube, iTunes, and on the Google Play Store.